Hello, my name is Armando Alanis. I'm one of the graduate financial literacy interns at the May Center, and today we're going to talk about credit and you. The agenda today, we will cover what is credit, credit scores, credit report, the bureaus, and how credit is calculated. And a good framework to think of this as we go through every single section is thinking of this like building a puzzle. And the reason I say that is because there are very different aspects that go into calculating credit. And so as we go through each and every one of these sections, we will start getting a better picture and a clearer picture of what it takes to actually build that credit score. So when it comes to credit, what comes to your mind? The main three categories here, or the main three aspects, are that credit determines your ability to borrow money, how much money you will get from lenders, and at what rate you'll have to pay back that loan you borrowed. One of the main things that determines your capability to actually have credit is your credit score. And so that begs the question, what is a credit score? Well, a credit score, if we keep it simple, is a 3-digit number that tells lenders how likely you are to repay your loans. Additionally, the credit score is made up of information that comes from your credit report. To take this information and put it in an example that builds a little bit more of more context, let's say that, for example, you have $50 and you have two friends that are asking you for loans. Now, one of your friends you've known for 10 years, you know this person very well, and you have no problem lending the money to them because you know for a fact that you're going to get paid back. Your other friend, in contrast, you also known for a couple of years, not nearly as long, but when you think about lending money to them, you feel a little bit queasy. You don't know if it's going to be repaid. And this situation exemplifies the position of lenders. Lenders don't really get to know us on a personal level, and it's very hard to build that relationship over many years. So, another great way to understand if a person is a good or bad credit risk is through credit scores. The reason being is that packaged within this number, you'll see many different factors that immediately signal or tell a lender if a person is likely to pay back their loan or if they're likely to default on their loan. And you see that these numbers have categories from going from bad, fair, good, all the way up to excellent. We talked about the credit report. So what does that mean? Well, a credit report is a document that may include information regarding foreclosures, bankruptcies, loans outstanding, and payment history, among other things. Now, when lenders want to know your credit report or your credit score, credit bureaus provide them with this information. Before we actually go into talking about credit bureaus, however, let's establish what is the relationship between that credit report and that credit score. Because we might be thinking, what's the difference between the two? And we might be looking a little bit like this, a little bit confused. So let's just make sure we understand the relationship between these two values. The information from the credit report helps determine your credit score. Simply again, the credit score is just the number. When we saw in the previous slides that 750 number or that 300 number, that's your credit score. The credit report, in contrast, is a comprehensive list of credit lines and payment history. And the report itself can be several pages long. So what happens is whenever you try to ask for a loan, your lender will probably get your credit score, but to get a little bit more detail and understanding of your behavior when you purchase something or how your payment history looks like over many years, they will probably also look at your credit report. Okay, now we can look into credit bureaus. These credit bureaus are agencies that store information that is available on your credit report. The big three agencies, and there are many more, but the big three include TransUnion, Equifax, and Experian. Bureaus sell or distribute the information in your report. On this second bullet point, we can add that since there are different agencies that operate and that sell this information, different information is reported to them. So the information that one agency might get might not be reported to another agency. And the reason I say that this is because what might happen is if a lender asks for your credit score, your credit report from one agency as opposed to another, you might actually get different numbers. And that's, again, because of the way in which things are reported to these agencies. So that's definitely something you want to keep in mind as you ask for loans or ask for a line of credit. Scoring your credit. So this is where we actually get into the nitty-gritty and see all of the factors that ultimately give us what is a credit score. Here we have 35% is going to be your payment history, 30% are going to be your amounts owed, 15% length of credit history, 10% will be new credit, and the last 10% will be your credit mix. Really quick, you can see 65% of what is going to determine your credit score really comes down to you looking at the way you behaved in the past, paying off any sort of loans you had, and also how you behave when you have credit available to you. So we go to the first part of scoring your credit, and looking at the biggest chunk is your payment history. And simply this again is just lenders trying to understand, do you pay your bills on time? Going back to the example we said before, wouldn't you want to know if you lend your friend those $50 if you were going to get paid back? Of course you would. And this is the same concept. Lenders want to know if they're going to get paid back once they give you a loan or a credit line. And this portion might also include things such as bankruptcies and collections of bills that you might have had in the past. Next, the second largest category is the amounts owed. This is 30%, and it looks at how much of your credit available you are using. And we can get into the weeds about this concept, but to keep it a little bit more simple, lenders generally don't want to see a person that maxes out their credit every single time. So that's something to definitely keep on mind when you think about credit utilization. Next, going on to the credit history or the length of credit history, this is 15% of your score, and it exemplifies how long you've had an account and the average age of all your accounts. Again, it gives the lender a lot of security to be able to look back over a period of years and understand if this person has made their payments in the past. And again, our example serves as a perfect way to exemplify this. If you had lent your friend some money and you see that every time some other person lends your friend money, they pay it back, wouldn't you be more sure to lend them today? Well, that's the same concept here. Looking at the credit history, the more years you have, it provides the lender a little bit more security to make a decision as to whether to approve your loan or deny it. Next, going into new credit, this is 10%, and it looks at number of inquiries you made recently. For example, if you try to apply to several credit card companies recently, you might see your credit score impacted. Lastly, we'll look at the credit mix. This is once more 10%, and it looks at if you have different credit lines, such as car loans, credit cards, or mortgage, again, because it provides information as to whether you've made payments on those as well, and if you've been granted credit in other areas of your life. Now we're going to move at looking at some of the resources. So in case you came up with any questions regarding credit or any personal finance questions that might have popped up during this presentation, we'll actually go through some of the resources that are available at the May Center and some of the resources that are available in regards to personal finance. In regards to the May Center, for career services, if you have any questions in regards to looking at your resume and having improvements made to it, you can set an appointment with an advisor. And just as well, if you have any questions regarding setting up a mock interview or even attending the career clothes closet, if you need any sort of apparel in order to attend an interview, that's all of the services that are offered at the May Center. In addition to experiential learning and civic engagement, if you have any questions regarding finding an internship or an externship, that is also offered there. Now, in regards to money coaching, we have money coaching sessions, and in these appointments, you sit and you have a one-on-one meeting with a money coach, and you ask any personal questions that have to do with finance that you might have doubts with, and the money coach will ensure to find an appropriate answer for you, but just as well to really set you up with an action plan in case you have any personal finance goals that you want to achieve, and create that accountability with your money coach. Having said that, there are two ways to make your appointment if you are interested. One is in person by attending at the front desk at SciTech Suite 111, and the other is through Handshake. If you click on the Career Services tab and you look at your college and then you look for the Money Coach tab, then you'll be asked to book the best time that works for you. And the great thing about money coaching is that you can attend in person to the May Center, but you can also attend by setting up an online appointment. In this case, you would be at home, for example, and the money coach would just connect and you would have a virtual appointment. So that's some of the great resources that we have available at the May Center. Again, just to recap really quickly what we saw today, we looked at what is credit, some of the basic things that are considered when you are applying for a loan, and how the credit process goes through creating a score, and what are the components that make up that number that really is important to every single one of us and our personal financial lives. I want to thank you so much for attending this presentation, and I hope you have a great day.